Stocks are down for the big U.S. media companies today. The president threatening those tariffs on foreign films, the likes of Netflix, Warner Brothers Discovery, Amazon, Walt Disney, Paramount Global, all seeing their stock prices go down as we get closer to the closing bell. This weekend, the president said he's ordering 100% tariffs against any movie that's not made here in America, saying the U.S. movie industry's dying a very fast death once movies that are made in America again. Scott Martin joins us, Chief Investment Officer at Kingsview Wealth Management. Hello, Scott. So this, I didn't think much of it at first when I saw this, because there's Trump going after, picking a fight essentially, as our guest earlier said, with Gavin Newsom. But then the companies and their shareholders didn't seem to be big fans of it, though, the big media companies.
No, and I mean, Gavin's state, too, where they're making all of those movies, so there you go. Connell, it's been funny. I mean, I enjoyed movies like The Rock, topically said. So that's good, too. I guess we can maybe bring that back a little bit. But Trump, with regards to Netflix alone, I mean, you look at the pullback in Netflix price today, it's nothing compared to the growth that Netflix has seen this year, both in price and company. So, I don't know, 25 or so +% on the stock price alone year to date. There's reasons that they're doing so well and that probably they're going to handle Trump's ire pretty well through this, but regardless,
I don't even know what it would mean, by the way,
pullback and buy some more.
For Netflix. Would it be, I don't know if this is defined or if it'll ever happen, but if he really went after them with tariffs on what? On like the shows too, like The Crown and all those? I mean, all those are made overseas.
Could be, depending on where some of the production is done, absolutely. And if you're going to ask people to AI it and say you're really overseas, shooting a scene or two, that's maybe what they're going to encourage. And so maybe that's something Netflix has to think about when it comes to production. But these are all things in I guess, typical Trump fashion, Connolly. He's just throwing out there willy-nilly to see what sticks and see what people maybe enjoy laughing at the most.
It's laughing or not. But, okay, the other thing he's been talking a lot about, I want to get your thoughts on this. He talks, even when he was questioned over the weekend about the economy, he says, well, the price of groceries is down, price of energy, he always says, is down. He points to oil and talks about gas prices. So we have a chart of oil on the tablet here, and, it is coming down. What would you say about the declines, though, that we've seen here in the oil price? All good. Obviously, lower gas prices are good, but you get to a certain price for the big oil companies, it's not great. How do you see the decline in the price of oil? What does it mean?
Probably a sign of some things to come, or a sign of things how they really are. I mean, this is definitely the tariff talk, and I think some of the rhetoric has thrown, obviously, kind of the markets and economy into a standstill, both domestically and globally. And I don't think that's really the greatest tactic or turn here. So I think we got to try to figure this out sooner than later. I think the markets are indicating that. But more so, it's like, OPEC has also done some production increases along the way that put the price down, so they can reverse those, as we've seen any moment. So the reality is prices being down here does have some benefit, but I wouldn't like to see it go too much lower to the tune of, say, any more than 10%.
Okay, so the bottom line, because to a consumer, it always sounds good to be lower. And it takes a while sometimes to translate to gas prices, but eventually it does. Right, so talk a little bit more about that before we let you go. What are the right versus the wrong reasons? Is this for the wrong reasons in some ways, right?
In some degree, because if there's a lot of supply out there because demand is down, it's falling off the table. Of course, price is going to be pressured from the top, and so that's not exactly something you want to see versus just, say, a production increase that all of a sudden knocks the price down like we had on that chart, 20%, which is ridiculous. So including the fact that the SPRs are low, too. And so we have those to deal with regards to Biden depleting those. So there's also demand there that's not showing up in the price. So to me, economically speaking, that's maybe a little bit more indicative of some things really slowing down globally than we may have first thought.
But that said, even though it's slowing down, is there no reason for the Fed to cut rates in this environment? Is there, right, real quick?
I really don't think so. I think the more players that are out of this game that let the markets, Connell, the consumer figure this out, the businesses, my goodness, figure it out, besides the powers that be telling us how things should be, whether it's interest rates or, say, global policy, especially when it comes to economic-related things, economy-related things, that would be helpful. And so, yeah, the Fed being out of this, as they have been recently, seems to be the right play.
Yeah, the president wants them to cut rates, but no one really expects that. That's Wednesday. Thank you, Scott, as always. Scott Martin with us, closing bell.